I've been in this industry for a long time, and I've actually learned more about the industry in the last 3 years than I had in my preceding 30. What I've come to realize, there's really only a few ways that you can make good money in the stock market. One, of course, is to be lucky. The other is to amass enough money that you can become a client of one of the Wall Street giants like Goldman Sachs, who manages about $2 trillion and has 46,000 employees to help them do just that. Or amass a large sum of money and find a hedge fund that has figured out the Wall Street system and then added leverage to it to beat them or at least compete with them at the game. And why it's so hard to compete with them is they own the data, or until recently, they've owned the data. They've had access to it. We have not. When I first got in the business, if you wanted to know what a company was doing and how they were progressing, you waited until they put out their annual report. You read their annual report and you made a decision. If you wanted to know what kind of filings they were making relative to what they were doing and what they were spending and who was buying and who was selling, to access those filings, you had to go to the SEC and request a copy and have them copy it, and you pay for the copy and you sit down and you read it. Well, that's all changed. I mean, back when I started in the business, no one had a website. You could not even go to a website to figure out what they did for a business. They didn't put out press releases so that you knew what they were doing, but that's all available now. And then you think people like Yahoo Finance and Seeking Alpha came around and they gathered that information and put it in a package and sold you a subscription so that you could go in and gather the package. But then you had to figure out what the package meant and what all the parts were and how to make it work. No, the only way was to basically gather enough money and invest it in Goldman Sachs and let their 46,300 employees help you make a better living. And I think the way I can illustrate that and the way I can show you where I want to take Best of Us investors is to show you that in order to beat them, you have to disrupt them. Now, I can only think of one guy in my current memory that has effectively disrupted Wall Street, and that is Valid Tenev. He's a 37-year-old Bulgarian that he and his partner started a company by the name of Robinhood. Yeah, they basically created a system that said, we don't need to be that greedy, and we don't need to have all these people working for us, and we don't need to be charging the retail investor a 5% commission on every trade they make until they get up to so much invested with us, and then we drop it to 2%. No, they said we can do it for nothing, and they disrupted the industry. Well, that's what I think I can do. What I think I can do is I've figured out in order for Wall Street to make money, they've got to follow a pattern, and that is they discover a company that's probably a penny stock. It's probably trading on the over-the-counter market, and they recognize that they're in a position to explode. So what they do is their analysts go to the CEO and say, we want to take a position, a 2% position in this company because we think it's really going to explode. And so the CEO says, well, let's see, we've got $2 trillion, so that means we got to take a $400 million position in this stock. Okay, give me the information. Okay, let's go forward with it. But it's going to take us, in that market where there isn't a lot of trading, it's going to take us a year to build that position. So what they do in that year is just badmouth that stock as much as they can. They look at the earnings reports, and even if their earnings are going up, they find reasons to beat them down. Because what they're doing is they're building a position. And until they get that position built, they want you to think it's a piece of crap, okay? They'll come up with anything to push that price down. Those of you who are regulars know that I have a couple of stocks that I believe are in that process right now. They're being badmouthed on a daily basis. So then when they get their position held or built, then they go to their analysts and say, find something good to say about it. So find something to make the general public, the lemmings, say, hey, this is something I ought to get involved in. And let's push that price up and up. Don't do it too hard. Make it go bit by bit so nobody really understands. And then let's create an event. Let's create an event where we kind of pull the curtains back and say, this is what this company's really all about. And we think it's the next thing better than peanut butter and jelly. And that's what they do. And then as they push it up, they continue to monitor it. And when they see, hey, it's reaching its top, it's reaching its limit, we need to push it harder and start taking our profits. And they will go in and they'll start taking their profits out and bring it back down to their 2% position, what they originally invested, and then let the floodgates open. And you will see from its peak, something from a 50 to 75% correction. And they'll then come back in and start the game all over again. They'll anxiously reduce their profits on their original position and then come back in. If in fact, and in particularly, if it got overvalued, which it normally does. So with that in mind, I want to introduce you to the 2023 production by Wall Street, directed by Jensen Huang and starring Charles Lang. Jensen, of course, is NVIDIA, and Charles Lang is the CEO of Supermicro Computer. It's a beautiful story, but once you hear the story, you'll understand Wall Street. And then you'll start to see, how can I beat them at the game? How can I gather the same information they do and figure out when it's time to build a position in this depressed company or this new company or this connected company? And what you're going to find is that's the qualities that SMI possessed. And then they had a champion who stood up, someone we all love by the first name of Jensen, and say, I love this company. That's who I'm giving my GPUs to. Yeah, that was a production. It was all staged for you. No, not really for you. Yeah, you as the patsy. But for Goldman Sachs, J.P. Morgan, and the behemoth, and then the hedge funds to make money. So let me explain it to you, and then let me tell you how I want to become the next disruptor of Wall Street. I want to climb in and shake hands with Vlad Tenev, 39-year-old Bulgarian. If a 39-year-old Bulgarian can do it, hey, maybe a 79-year-old American can do it. Let's take a look at this. Okay, this is a trading views chart of SMCI, Supermicro Computer. And we really start looking at it back in January of 2022. And we see the stock just kind of is tumbling along at a price of about 35, 37, 40, not making much head. Where I want to start looking at it is in January of 2023. And this is an earnings report of January the 31st, 2023. And their earnings were up 13%, and their revenues were up 3%. If we jump ahead a quarter, we have a quarter where their earnings are down 4.5%, and their revenues are down 7%. Now, in that interim, that price went from $61 to $101. So that's a 65% increase based on a loss in earnings and a loss in revenue. Doesn't make a lot of sense, but you would have thought it done better. But look what then happened to the price. Even though they had a bad earnings report, the price of the stock basically went from $81 to the next earnings report. It was up at $346. That's a 240% gain on a bad earnings report. Why did that happen? I believe it's happened because Goldman Sachs started accumulating this stock way back here in 2022, January 2022. And they're building I made a mistake, it's a $40 billion position if they put 2% of their holdings into it. And they just took that on the back of a bad earnings report and took it from, what would that be? 40 billion to over 90 billion? They did that in 90 days. Yeah. And then they come up with an earnings report, and earnings are up 20%, revenues are up 10%, and then the price drops down. Then we have another, I wanted to mention, this is where I bought it. In August the 8th, 2023. Why did I buy it for $262? Because on that earnings call, Charles explained that they were going to be spending some money, and they were going to have to build 2 new factories. If I remember, one was going to be in Malaysia, and another was going to be in Mexico, and another was going to be maybe in Australia. But they had to allocate money to build those factories because the demand for their product was so high. In June of 2023, Charles held a conference, or he was part of the Super Macro Computex keynote on June 1st of 2023. Now, Charles, I would guess, was born and raised in Taiwan because he has a very broken accent. It's hard to understand. But he had a friend show up to help him with his keynote, a guy by the name of Jensen Huang. Yeah. And what Jensen said, if I remember correctly, was that they put 8 GPUs into each one of Charles's boxes, each one of his computers. And if I remember right, Charles said there were 30,000 other parts in the box, and that it weighed 70 pounds, and it was water cooled. And I think he said it sold for about $250,000. And Jensen was going to supply all the GPUs that he needed to do that because he was getting orders from companies like Meta and Google and Microsoft and all the big data centers, because he explained they had to replace all the computers, servers that are in the data centers, and he needed 2 new factories to keep up with the demand. He said at that point he had a 2-year backlog in demand to meet the demand of big tech. And Jensen stepped up and said, yeah, I'm going to make sure he gets all those that he needs. And that brought us to the next earnings report. And that was in November the 1st of 2023. And the earnings were up 4.5%, and the revenues were up 0.5%. But look what happened. Look what happened in December of 2023. What I think, if you go back and look, what you're going to find is this is when Goldman Sachs came out and said, this is something we really believe strongly. They had finished building their position. I swear to you, they had finished building their position. They had their, what did I say, $40 billion invested in Super Macro, and they took it all the way up by the next earnings report to $522. And we're not at the top yet. We're down here. And so in that year, those 4 earnings reports, Supermacro went up 750%. Now, I want to show you something I think is kind of interesting. See that yellow line? That's NVIDIA. That was what was happening to NVIDIA as the SMCI story was playing out. And they are driving this thing even higher. Now, I think the reality is, we have to dig into it a little deeper, but NVIDIA is probably overvalued by Wall Street, and they'll bring that down as well. What's this box? This is what is called a Fibonacci retracement. What that says is based on the support level, and I'll light that up so you can see it. The support level on Supermacro is down here at $238. And so you draw a line from the bottom to the peak, and Fibonacci says when a stock gets overvalued, it's going to retrace anywhere from 50 to 78.6%. And that's probably where it's going to come down, somewhere in here. And you can see it's on its way. This is a daily chart, and it's on its way down here. You can see that NVIDIA has started on its way down. What you need to know, though, is Wall Street liquidated their holdings and went back to their cost basis or their initial investment of $40 billion up in here and maybe down to here. Where did the retail investor buy into this? Probably down here, somewhere around $915 when it gapped up. Probably got scared when it then gapped down to $812 and then gapped back up and then came back down and then was all confused. And then it went up here. Wall Street's back down to their 40 billion, and they'll come back in and buy it down here somewhere in the 650 range. Hey, that's the super micro story produced by Wall Street, starring Charles. And my takeaway is that if I understand that, and if I believe it, and if I believe that's how Wall Street works, well, then I have an opportunity that the hedge funds have recognized is to just get in front of them, or just if you're only, if it takes them 2 years to build a position, if you can figure it out what they're doing somewhere in the first 6 months of the 2-year period, you can buy the stock while they're pushing it down. And again, I've talked to you, I've got a number of them. I think that's exactly what they're doing with AEHR and maybe even SoundHound and Applied Digital. They recognize that if they're going to make money, and with a $2 trillion portfolio, it takes time to buy in. Well, as I said, when I was a financial advisor back in the 80s and 90s, we didn't even have websites. So we couldn't do that. My issue is, okay, you figured it out. Now go to work and make it happen. Well, I only have 24 hours a day, and I really only want to put about 4 to 6 hours a day into it. So my dilemma is, I either pull this back and just do it for myself and a few people, or I go out and hire some young people who have good technical skills, who know how to write the formulas that I struggle to write in my Google Sheets, who know how to listen to, or I can train them how to listen to earnings calls. So we never miss an earnings call, and we interpret it, and we sit down in a committee. And this is what Kathy Woods has done. I just don't think she figured out how Wall Street works, although she should. She's worked for them a long, long time. But nonetheless, I think we're at an opportunity to disrupt Wall Street as a tribe. And what my goal, I sat down with Trent yesterday and told him, I want to take this to where I've got 10,000 people paying me $60 a month to get this kind of information so that they can buy into stocks. Is NVIDIA and Supermicro the only two that I've had success with? No. Back in July of 23, I found Vertiv Systems, VRT, bought it for $24.50. It's now at $83.11. What do? They create the air conditioning system for the racks inside the data centers. I said, well, if Charles is putting all these heavyweight computers that are generating a lot of heat, well, Vertiv ought to have a good run. Well, they're up about, what's that, 24 to 83? That's what, something in the neighborhood of 400%. SNPS started with it at 454. It's at 574. PSTG bought it at 37. It's at 53. NVIDIA, I got first into that at 275. It's 875. Micron recognized that this is crazy. I realized. I came to an understanding of what the difference between a CPU and a GPU is. A GPU is a graphic chip. It was developed for my grandson who played games until 3 o'clock in the morning on his computer, and he needed more processing power than I needed to search Google. Okay, so I recognize that, but I also knew on my computer, I never use up my CPU. What I use up is my memory, and it slows my computer down, and I have to shut programs down. Well, if you're eightfold increasing the CPU or from CPU to GPU, well, you're going to need more memory, because what the memory does, as I understand it, it remembers what you just did, so you can go back and do it. Don't have to rebuild it each time. So I bought Micron at 60. It's now at 125. Bought another air conditioning company, Modine, at 88. It's at 96. So there are opportunities here to get in and understand that there are depressed stocks, there are newfound stocks that these behemoths go out and build a position in. Can you find that? Could I literally find where Goldman Sachs was building their position in Supermicro? Yeah. On their SEC filings. Every quarter, they've got to tell the SEC, what did you buy this quarter? Well, if it took, like I think it did, 2 years, I could see over a 2-year period, my God, what are they doing? So I can gain access to that, and particularly if I have a team of people that I teach how to do it. The other thing that is important to me about that is I'm 79 years old. As some of you are at Friday's Stock Talk, you know that I've had a problem. Well, folks, I still have the problem. It doesn't seem to want to go away. So if this is going to continue, I've got to have an exit strategy. And my exit strategy is to get to 10,000 subscribers, paying me $60 a month, and making a buttload of money, and me building a staff that can feed them even more. Look, again, $40 billion going up 775% in 1 year. That's insane. But that's what they did. And that's just Goldman Sachs. So, I'm Kerry Grinkmeyer. I'm a retired financial advisor. I guess I need to give you a call to action. If you want to be a part of this, and we're exploring what that might mean, help us build it. Help us get to 10,000. Help me go out and hire the people. Maybe I'll be hiring you. So go into the description, and there's a coupon that says you can join us for 50% off. That will go away this Friday. I'm not giving this away anymore. I've got to keep it up at $60 so I can go and buy the staff I need to dismantle the system, or at least to disrupt the system that Wall Street has built. I'll talk to you again soon.